won't be your normal. I'm like, no, okay, you're either in or you're out, right? It's a binary, it's a 1-0. You're either in recession or you're not. But it's interesting that there's so many people, and again, I was in the camp, right? I looked at the data and I said, everything except employment is down. Employment, I believe, is totally manufactured by the birth-death ratio and that nonsense.
And lagging.
So we're in recession. And yet, everywhere you look, things continue to rock along. And I think that's because the expansion of credit, right? Credit card debt went crazy. Consumer debt went crazy. Corporate debt went crazy.
Video.
There's an argument in the debate, and others would just. I don't think we've had any inflation. We've had currency devaluation. We've had the greatest currency devaluation in the history of currency devaluations, and it was, I believe, again, intentional, under the cover of lockdowns, which I believe were part of the plan to create an environment where the MMT nonsense, the cult of Kelton, as I refer to it, could prosper. Look, we created 50, and one of the things you appreciate when you go to Europe is we're just in the United States. 47 years of republic. It's just not. It's the Moors were in the Iberian Peninsula for 800 years, and they're gone, right? I mean, but they were in charge for 800 years, so they've been around a long time. But for 246 of the 245 of the 247 years of the U.S. Republic, we created half, and then in 2 years we created the second half of the money. We literally, out of thin air, created half of all the money that's ever been created. And I don't believe that was unintentional. I believe it was absolutely intentional. It's the only way out. When you're an empire and you become overly indebted, you have four choices. You can pay back. Can't do that. Okay. Even if you taxed all the wealth, forget income. If you taxed all the wealth, you can't pay back the debt. You can restructure it, but someone's got to take the other side. No one's going to take a worse deal. You can default on it. Whoa, can't do that because then you get kicked out of office. So you devalue it, deflate it, or inflate it. Is that, to me, devaluation is different than inflation. Inflation is when prices rise because demand exceeds supply. If there are 1,000 cars and there's demand for 1,200 cars, the price will rise. That to me is inflation. If I print $1 million and I devalue the currency by 50%, to me that's currency devaluation. Now,
but you create a lot of demand because there's more money.
Yeah, one could argue it's the same. Yeah. It's the distinction without a difference, and that's fine. But I've been debating this with Mike for the last year, saying this spike in inflation is gone. Right? By the end of this year, we'll be back to deflation. There will be no talk of inflation. We've already seen it with the commodities, and now we're going to see it in services. And then the sticky part is the owner's equivalent rent, which is a dumb thing. Rent, you charge yourself to rent your house from yourself, which is
super lagging. Yeah,
just a total. So I just don't believe there's ever been any inflation because there was a step function change in global supply and demand by this authoritarian lockdown. I used to be in the camp that recession. We're in recession. We're going to be in a recession. This last trip, no way.
Yeah.
No global recession. Planes were full. Hotels were full. Restaurants were full. Prices were high. People were well dressed. Everybody was happy. So I'm basically of the belief that we are in kind of this Goldilocks world where they're devaluing the currency at a rate. It's like boiling the frog, right? If you do it too fast, the whole experiment, you kill the frog. If you don't do it fast enough, the frog jumps out. So they actually are doing it at the right speed.
However, the outlook for hiring has become more pessimistic, with just 42% of respondents expecting to increase their headcount over the next year. Despite the labor market's surprising resilience amid the Federal Reserve's rate hikes, job growth is displaying signs of a slowdown. In June, U.S. employers added only 209,000 payrolls, the lowest rate since a decline in December 2020. Labor shortages, inflation, and competition were cited as the greatest short-term risks to their companies. Although inflation has eased from last year's 40-year highs, it continues to significantly impact pricing decisions and profitability. 3/4 of the respondents stated they are likely to continue raising prices to mitigate costs. These factors contribute to concerns about the recession and where the recession trend is heading, as discussed further in the video by Yesco.
We did have, past tense, a recession, right? Q1, Q2 of 22, negative GDP, back-to-back, was a recession. Now, it was a 2001-esque recession. I think total GDP last year was 0.9, which is almost exactly the same as 2001, which was a recession.
Now, adjusted for inflation. So nominally, everything is insanely hot. But if once you adjust for inflation, it was,
And real is what matters, right? So but the reason they didn't want to call it a recession was because there are, 4 things they look at. 3 of them said recession, but employment didn't. It's because they fudged the employment numbers. I mean, and I don't mean like fudged them intentionally to get around calling the recession. It's just the birth-death ratio is a bad system. It's been a bad system for years. Why they don't change it? We know with certainty because they're computers that tell us who gets paid, how much they get paid, when they get paid. We know what employment is. But yet we still use this antiquated system of saying, well, we're 36 months into an economic expansion. Therefore, this many companies should be formed and this many should die. But that all goes away in a ZERP world because the incentives are wrong. When we had negative interest rates, there was really bizarre stuff going on. 3/4 of the jobs, were mythical. And that's fine. And the other one is this whole nonsense that the administration is trying to say, they're the greatest job creation president in history. Are you joking? You locked the world down, not they, but the world locked down, and people stopped working, and then they go back to work. That's not job creation.
it's base effects. I mean, it's
basically, but it's the same fallacy of hurricanes. When a hurricane destroys Florida, they don't ding the GDP. When they rebuild, they add to the GDP. That's ridiculous. But we've always done it that way. In fact, retail sales don't adjust for population growth. What do you mean you don't adjust for population growth? Of course you have to. Well, we don't. And we're not going to change. Well, why? It's just this, and they have a footnote that says this is not adjusted for population growth. But that's silly. Now, maybe population growth isn't as fast as it was because of immigration laws, but there's still population growth. And the idea, or gas prices, right? So much of retail spending is gasoline. So if gas prices double, that's really not growth. I mean, you're paying more for the same gas. Why people are so reticent to call a recession? It's like recessions are not bad. In fact, I will argue recessions are really good. And people say, that's horrible. People lose their jobs. I'm like,
they didn't last year.
Look, not all companies should exist. Not all companies are good. It's just fact. And keeping bad companies alive isn't actually good for society. It's just not. And here's why I say we're coming out of recession. The number of people who lost jobs, fired, downsized, whatever you want to call it, huge. That's happened in every recession in history. And then what happens? You get massive opportunity in venture capital. I have never been more busy as a venture capitalist, ever. And it's just like 2009, just like 2001. And those vintages are by far the best. Okay? 2021 vintage is going to be a horrible thing. Why? Keith Rabois summed it up. He said, yes, we've all lost our minds and valuations are too high, but you go first. You skip this hot deal by saying the valuation.